Does the weakening dollar imply that Powell is actually dovish enough?
No, actually what the dollar is implying is that Powell's going to have to catch up to the dollar. Okay, important question, haven't had it all week. Okay, dollar going down is front running the Fed.
Yeah.
See that? Front running the Fed. The dollar going up was predicting that the world was going to go into quad 4. The only quadrant with the high expected value, positive expected value for the dollar is in quad 4. Okay. Now the market, the currency market, and I'd argue the bond market is basically saying, and by the way, the tranches of the bond market that don't trade, and by the way, the companies that miss. Again, all these companies, FedEx, Oracle, Darden, they're all telling you the exact same thing that Powell's going to have to come to realize, as opposed to what I listened to it this morning because I was again in traffic on the Merritt, surprisingly or not, because people that don't work on Wall Street went to work this morning because that's what the real world had to do. But I'm listening to CNBC try to break down the GDP number. I mean, these people are people literally are going to be shocked if we're right on GDP come the Q4 number, which is in the new year. And that's really going to be the point, I think, where people just go, wow, it's really not 2%, and the consumer really is slowing. Again, we're at 0.36% for our GDP Nowcast, slide 14 in the current macro deck, guys, for the fourth quarter, which will get reported at the end of January. So I think Powell's going to wake up to that and say, oh my God, what did I miss? I'm a lawyer. I miss it all the time. I expect to miss, but I didn't expect it to miss by that much. I mean, that's about as wide a delta as we've had in a long time. I think the last time, for those of you, because lately I've been accused of different things, not of being like 6 feet tall or skinny. I mean like other real things. I've been accused of being a perma bear. Which is total bullshit, but whatever. I mean, Chaplin signed off on bullshit. We're good, right, Chapo? I mean, so this is where we're at. When we were making this call in Q4 17, this number, which was originally reported higher, nobody had a 3 on there. Like, we had 3 handles on our GDP numbers well before these numbers were reported. Okay? That's when we were bullish on growth accelerating, bearish on gold, and bullish on treasuries, or bearish on treasuries. Okay? So again, the last time we were that far away from Wall Street, and that was to the upside, they were, oh, this is bad, it's Trump, is now on the downside. Okay? So over here, we've not been that low since we were that high. Okay? So again, we've already booked all these gains associated with growth accelerating. I'm not going to nail every single top and every single bottom in technology. Everybody knows that. But for 2.5 years, I was long to the gills of technology, and that was awesome, right? And then I started shorting software in July, and that was awesome until the end of October, or really the middle of October. And then it was not awesome in November, and now it's actually not that bad. It's against all my longs. IGV's been a great short in December. So again, just think about where we are today going into the Christmas. Imagine this, Jonesy. Remember, you know how everybody's like, oh, that was the point where you just had to buy everything. Because on December the 24th of last year, you would have, first of all, a lot of you, be honest with yourself. You lost a shitload of money if you weren't a Hedgeye subscriber in the fourth quarter of last year. I even heard of clients that knew our process, love our process, that also lost a shitload of money in the fourth quarter of last year. So now everybody goes back and says, oh, look at the year to date. You're losing year to date. That's clearly everybody bought the low and never came into that losing a lot of money, right? No, okay? But what if that was identifiably a low, like the most obvious low, and this is conversely the most identifiable bubbly high, only a year later? Of course you wouldn't think of both the same way because Wall Street doesn't have a process that goes both ways. But you should really consider that given our views right now on GDP in particular.